Hi guys, Protorius Benny here. It's weekends already and I'm back with another video on how to start trading forex as a beginner. In today's video, we want to look at the concept of fair value gap. But before we can understand this concept, you have to understand what imbalances are. On my previous video, we looked at liquidity, so we will combine this concept together with imbalances and then try to understand what fair value gaps are. Okay, so an imbalance zone is where price has moved sharply without offering equality for bears and then the bulls in the forex market. So for instance, in the 4-hour gold chart, we have the bears pushing price from this high into this lower low. You realize that when price was making its way down, it didn't really give an opportunity for the bulls or for the buyers to come into the market. So we describe this whole area as an imbalance zone. That is to say that there's no fair play in terms of the buyers and the sellers in the forex market. Now, from the definition of imbalance, we are saying that a fair value gap is a 3-candlestick pattern that indicates a situation where the supply of buyers is significantly higher or lower than the demand of sellers. Let's try to use this image here to understand the formation of a fair value gap. So ideally, fair value gaps are price inefficiency or imbalance zones of 3-candlestick pattern. So we have a bullish fair value gap and then a bearish fair value gap. Now for each fair value gap, like I said, it's a 3-candlestick pattern. The first candlestick, which is of less importance, the second one, which is the expansion candle, very important. It must be an expansion candle, okay, and then the confirmation candle, which is the third candle. Now, the confirmation candle, its wick or its body must not come to test the upper wick of the first candle. In that case, we will not have a fair value gap. But if you have the first candle and then the confirmation candle, their wick not overlapping within the expansion candle, then we have a fair value gap. So this is a bullish fair value gap and this is a bearish fair value gap. Now let's delve right into a real-time chart and then try to identify fair value gaps. Alright, here we are on the 4-hour gold chart. Let me try and then do away with my drawings. Okay, yeah. So first thing you want to do when you are identifying fair value gap zone, you are looking for that idle space or an area within a 3-candlestick pattern where the first candle, its wick, and then the third candle, their wick, are not overlapping within the space of the second candle, which is the expansion candle. So for the purpose of this video, we want to start identifying fair value gaps right away from this lower high into this higher high. But remember, for everything that you do in forex, the higher the time frame, the higher or the stronger its effect. So mostly what I do, I start identifying these zones from the monthly straight away to weekly and then through to the 4-hour time frame. But for the purpose of the video, like I said, we will use the 4-hour time frame and then consider this bullish move. Now here we are. Let's start identifying fair value gaps from the low of this price action or the bullish move. Let me try and then zoom in so that we can actually appreciate the concept of identifying fair value gaps. So right away, a little bit, this way. So we have this particular candle here, which is the first candle, an inverted hammer or inverted doggy, however you call it. What I want you to know is that it is the first candle before this bullish expansion candle. Then we have the third candle here where we do not have the lower wick, but we will consider that area or the body. Remember the definition, I say it's the body or the wick of the candle. Now we just grab a shape, okay, here. So let me try and then use this shape to identify the area of the fair value gap. Let me try and adjust it a little bit, okay, on top of the first candle. So you see the first candle, its upper wick, and then the third candle. So this area is a fair value gap. All right, so let's try to identify more. So we can consider this very candle too as a first candle, and then of course this one here as a second candle. then the third candle. So you see within the space here, the third candle and the first candle, their wick are not overlapping, so we could have another fair value gap right away into this zone. So let me try and then bring another shape to identify that area. So the third candle, it's wick, and then the lower candle, the first candle, it's upper wick. So here, all right, that is it. So you see the first candle, which is this one, it's upper wick, and then the third candle, which is this inverted hammer, it's lower wick. Then the whole of this area becomes a fair value gap. Now let's do more. We can identify more. Let me get another. Okay, all right, so we have this very first candle here. You see the bullish candle, the second one, and then the third one, right? So we have a fair value gap area here. So we can just bring our rectangle to identify that area. Let me try and then adjust it. Yes, so you see, so this whole area is our fair value gap, right? Now there are a lot of them. So one here, let me see, Control C, Control V. All right, we have it there, and we can just use this to identify the fair value gap on top of that candle there. So yeah, let me adjust it a little bit. So you see there's another fair value gap. You see it. So you see, what does price do? Price normally, or ideally, these values are very important. They are liquidity void, right? Price will always come back to pick those orders over there. Now the question here is that which fair value gap would I trade from, or which one will hold or which one will not hold? This I'll cover in the next video on fair value gaps. So stay tuned, do the YouTube draw, hit the subscription button, and then like and comment. Let's get the channel going. All right, so yeah, you can see there's a big fair value gap here. We can identify that one. There's also one here from this bearish candle, it's top wick, and then this third candle, it's lower wick. There's a right space here, then we can identify as fair value gaps. Let me just try and then get the rectangle over there. So yeah, that is it. So you see the fair value gap, right? You see the fair value gap. So you can identify them more and more and more within the 4 hour chart. We have fair value gap here, very big one, of course, and then here too, another fair value gap between this doggy candle and then this third candle right here. You see the expansion candle. Of course, we have one small one here, a very tiny one, of course, between this candle, the expansion candle, and then the third candle right here. Now let's consider current price action, like from this particular bearish move to this particular lower high, and see if we can identify fair value gaps, right? So yes, right away you can just see it with your naked eye without thinking, right? There's a fair value gap here. Let me grab this shape here to indicate that area. Okay, right, so you see the fair value gap, this area right there. Now there's another one here. Let me just get a different shape. This shape here, what am I doing? This shape right here. Now let me try and then enlarge it to cover the whole space. So yeah, there's another fair value gap here, and then of course the third one here. Let me try and copy this shape. Control C, Control C, Control V. All right, there I am. I'll try and move the shape to cover the area there. Okay, of course there's one tiny one here in current price action. We do not even know whether it will form a fair value gap or not, but what I'm trying to say is that if the first candle, if the third candle actually closed, leaving this space right here, okay, the space right here, then it becomes a fair value gap. Why? Because we have this candle. You see the 4 hour candle had not closed yet. Okay, so we consider that one as a third candle. It's upper wick, and then the first candle, it's lower wick. Now this is our expansion candle. Okay, so if the candle should close leaving this area, then we say that this is a fair value gap. All right, now what is the essence of fair value gap? Ideally, we call them, or they are, liquidity void areas. Now price will always get attracted or propelled from these areas. So what do I do with them? I look for it, or I look for entries towards them, then I look for trades away from them. But then we do not trade them in isolation. Okay, we look for other confluences in addition, whatever kind of strategy you are using, just to add up, and then of course you can always catch trades in terms of fair value gaps. Okay, now the ideal question is, remember I said you should mark these zones right away from the monthly time frame, weekly time frame, through the daily, and then the 4 hour. Look at, for instance, we have, even on the 4 hour alone, we have about 10 or 12 fair value gap zone. Now, how do you trade, or how do you react to these zones? For instance, we have the first one here, second one here. If price is retracing back right into these two zones here, which one do I know that it will hold? Which one will not hold? Okay, that is what I will cover in the next videos to come. Do the YouTube bro, smash the subscription button, and then like the video, comment and share. See you in the next video. Peace out.